Hello, everyone, and welcome to another ASUG webcast. My name is Maureen McInerney, Partner Marketing Specialist here at ASUG, and I'll be your moderator for this event. I'd like to thank everyone for taking the time to join us for this presentation today. Today's webcast is being recorded. The link to the recording and the accompanying slides will be posted to the ASUG website. I'd like to remind our audience members that you can submit your questions at any time by clicking the purple Q&A button at the bottom of your screen. Today's webcast is Improved Productivity of Your SAP Controlling Implementation. Your speaker today is Ashish Sampat, SAP FICO Consultant, and your webcast today is sponsored by ERPfixers. ERPfixers is a platform of thousands of experts that specialize in most of the SAP modules. If you would like to know more, please visit their website at www.erpfixers.com or contact us on info@erpfixers.com. And with that, I'll hand it over to Ashish.
Great. Thank you very much, Maureen. Hello, everyone. Thanks for joining. My name is Ashish Sampat. I'm based out of Chicago, suburban Chicago to be precise. I'm an SAP Finance and Controlling consultant working on it for the last two decades almost. Specialization in product costing, material ledger, and other areas of controlling, and of course some areas of intercompany as well. Over the past so many years, I have learned several things on SAP and tried to share them in my book, First Steps in SAP Controlling, which is more for beginners, and then the advanced tips and tricks are in the second book, Expert Tips to Unleash the Full Potential of SAP Controlling. The second book is where we have picked up some tips and we're trying to share with this audience right here, and hopefully we'll address some questions also at the end. In my publisher, Espresso Tutorials was also able to translate the first book in French and Portuguese. So we'll see some links and details towards the end of the webcast session. So with that overall background, I will try to go to the next slide and we'll see what areas we are going to cover. We will cover 5 tips. One is around evaluate the right cost object for you. We have seen so many cost objects, right? Production order, process order, CO production order, and multiple other cost objects. Which one is the right cost object for me is what I'm trying to understand. Is cost center right, or should I stay with internal order? And what all features do we have in each one of them is what we'll try to see in that first tip. The next one is around separate GRIR for intercompany. So good receipt, invoice receipt is part of the standard SAP process in the procurement side. But by default, it is, there is no demarcation between intercompany and third party or the regular vendor. So how to achieve that is what we'll try to see in the second tip. And the third one is around automation of WIP, variance, and settlement. WIP as in work in process. So these are all period and tasks, and so some of them can be very resource intensive. So how to overcome, performance issues, and if at all there is any way to schedule them as background jobs is what we'll try to take a look at. The next one is around capturing of trading partner on transactions. Again, trading partner is someone who's internal to us. All intercompany transactions need to flow through trading partner field and populate it on the financial accounting documents so that we are able to see this data in financial consolidation. So there are downstream implications, and many companies have struggled to enter this or capture this on transactions. So that's one tip. The last one is on material status. Again, this is cross-functional, but controlling team has, good benefit coming out of it. So thought that we'll share that as well. And lastly, there is, we will cover summary, questions, and resources. We would like to devote about 10 to 15 minutes for questions and also share the resources at the end. So there will be a Q&A section in your webcast chat. Feel free to start posting your questions that you may have now or that may come up during the discussion of the topics. Okay. We'll move over to the first one, evaluate the right cost object for you. So again, there are select ones I have captured here. Again, these are the most frequently used. There are others as well which we have not entered, but this should cover the most widely used ones. So when it comes to production order, we say that it is something that we use in discrete production or discrete manufacturing, whereas process order is used more for process manufacturing. Both of them are very similar in nature in terms of from the costing or controlling point of view. There are different features from the production planning, and then other features like there is a process instruction sheet on the process order. But other than that, in terms of their month-end processes, they are similar. In terms of their concurrent costing, as we know it, in terms of goods issue, confirmation, goods receipt, they are very similar. So again, it depends on the type of industry that you come from. Then look at the CO production order. They are again very flexible, can be used in any industry, just that we don't get any integration with production planning. So you'll say, when exactly should I use CO production order? I would say that if you are not using production planning module, yet you want to capture the costs and have a similar amount of detail in terms of goods issue, confirmation, goods receipt, then CO production order is your object to go to. Then there is this product cost collector. It is something that we have seen in repetitive manufacturing, where you are continuously making the same product multiple times, sometimes even several thousand products a day, and you do not have a way to capture a very specific goods issue to an order. So usually what you'll say is, I will backflush. Backflush is in confirm it standard. And that's what repetitive manufacturing industry requires, and that's what product cost collector allows it to do. So again, a very powerful feature. It's again can be linked very close to the production order feature, just that in production order you do need to perform a lot of transactions like goods issue, goods receipt, confirmation. Some of them can be automated, like backflushing of raw material can be done during confirmation, and auto goods receipt can also be set during confirmation. But in terms of data entry, product cost collector is relatively less compared to production order. That's a general thumb rule that we can say. But and again, when you have entered less data, you're likely to get not so optimal results. So it all depends on what kind of level of detail you're looking for and what level of effort you are willing to put. So there's a trade-off between accuracy versus the effort to put in that much info. Internal order. This is one of the most versatile cost objects, so to say, that you can collect, monitor, and settle costs for projects. Internal orders can be used even for overhead controlling. It can also be used for investment management and so on. So again, very versatile. And they are more inclined towards overhead side. So you can't collect production related costs very easily on internal orders. But in terms of the flexibility, they are one of the most flexible around. The plant maintenance is very specific to the maintenance of machines and equipment. They are kind of similar to production order, just that you're not producing anything. This is more maintaining service on equipment. And sales order again can be used as a cost object, but most likely most of us would have seen it as a revenue object, right? So it's something that we use it more as revenue object, but once in a while we also assign cost to sales order directly, especially in make to order production or sales order costing and so on. And lastly, the cost center. Again, it is one of the most widely used master data elements. Most companies which have implemented FI and CO would likely have cost centers implemented as well. So let's look at what kind of data you should be looking for, and that is something that I will move over to the next slide to discuss. So this slide speaks about prerequisites and order types that are used by each object. And then down below there is a table which I'll try to read through and explain what it is. So when we look at production order, we definitely need material master, bill of material, work center, and routing. The order type is N, and order category is 10, and order type that is SAP delivered is PP01. And that is the same level of information that is given here in this table. I'll try to read through. So basically, we have a process group in terms of prerequisites of master data. And then we move over to the process in each row and cost object in each column, and then transaction code in each cell. So when we said we need material master, bill of material, work center, and a resource, and routing or a master recipe, they are in production order and process order point of view. And when we move down the rows, it speaks about, what is an example order type. So in case of production order, it is PP01. In case of process order, it is PI01. In case of CO production order, it is CP01, and so on. And when we move to the extreme right, cost center does not require any prerequisite master data. And again, there is no order type attached to it. Same way in terms of sales order. And then there are some transaction codes also given here on the left side, which speak about the order type. So there is this transaction configuration transaction called KOT2, which is used to set up an order type. Of course, you can use standard SAP delivered or copy them in your own ZP01 and ZI01 kind of a thing to use for your own organization use, so that you don't touch the standard SAP one. And then there are other transactions like OK07, which is related to settlement profile, OK06 for allocation structure, and KEI1 for PA transfer structure. All these have to be read together in order to see what is the impact in terms of the data flow. But basically what this, the idea is to see, all these cost objects are available. I have so many options, and I have need for, let's say, purely production related, but I don't have production planning introduced. So obviously CO production order is the way to go. And if we are in a repetitive manufacturing industry, product cost collector is the way to go. And then you can, of course, not use a plant maintenance order to track your regular production costs, but it is something that you want to use for your production costing, or rather the maintenance costing. The next slide speaks about the, what transaction codes we would use to set up the cost object data, to do goods movements and activities, and also to do your period end closing and reporting. So what we saw in the previous slide was order type configuration, setup for prerequisites and master data. On this slide, we will look at, transactions like how do I create a CO production order? So obviously the transaction is KKF1, and how do I create an internal order? It is KO01. Now in terms of changing a production order, it is CO02. And changing a process order is COR2, whereas changing a cost center is KS02. So again, a lot of information here in terms of the transaction codes. And then when it comes to goods movements and activities, it's basically similar three transactions: goods issue, confirmation, goods receipt, and which we must have used MIGO as a very generic transaction code for goods movement, and MB1A, which is very specific for the goods issue on production order, process order, and CO production order. In terms of product cost collector, we mainly use MFDF, which is nothing but the backflushing transaction for product cost collector. That one transaction controls everything. Whereas when it comes to confirmation, we confirm using CO11N, CO15, or COR6N and CORK. And then, of course, there's this generic confirmation transaction KB21N, which is used on the CO production order as well as internal order. But ultimate objective is to debit the cost object and credit the cost center where the activity type is being used. And obviously, sales order does not have any implication on these. But then when it comes to a cost center, you normally do not have a goods receipt, but you can issue goods to a cost center. Let's say it was some sort of scrapping or some sort of R&D related work, then you may want to issue it on the cost center. And now when we come to the period and closing, there are several transactions like overhead, revaluation of activity types, template allocation, work in process, variance, and settlement. So again, this lists several transactions for each of the cost objects. This can be a very handy piece of info, especially when you are looking at using a specific type of cost object. As an example, if someone says that I'm already using production order and I do want to explore if process order is going to meet my requirement, as you can see, a lot of features are similar. Now, this obviously has to be a joint effort with production planning team as well as your controlling team. But in terms of features, there are a lot of good similarities and good features in each of them. But then exploring that would be helpful in a joint effort. And lastly, for reporting, we have, line item display. Usually KOB1 is the one which we use for almost all the transactions related to orders, whether it is internal order, production order, process order, CO production order, or a product cost collector. And then in case of cost center, it is KSB1, whereas the product cost collector has a KRMI as a dedicated transaction. So that's about our cost objects. Again, if you have any questions, feel free to add in the question answer session window, and then we'll address them towards the end of the session. Okay. Moving on to the next topic, separate GRIR for intercompany. So again, when it looks to internal good transfers, it is very difficult to report intercompany and third party. How do you separate it? And that's the main requirement here. So what they have come up with is that as far as your third party or regular purchases are concerned, let them go to GL account 191100. However, intercompany should hit a different account 191000. So what you are seeing here in the screenshot is basically the original setup of OBYC, which is our MMFI account determination. By default, in its current form, everything is set up to one GL account, 191100. And here is where the requirement comes up to enter intercompany transactions on 191000. So how do we do that? And that's where this revised setup comes in picture. There is this account modifier that you can introduce. By default, SAP does not activate it, but when you click on the rules right here on the top corner of the OBYC for WRX, it allows you to select the account modifier. Once you select it, we can maintain account modifier YRX and ZRX. So YRX is for third party or the regular purchases, and ZRX is for intercompany purchases. So this is the configuration setup. This standalone will not help you. There is some additional work required to be done, which you will see on the next slide. But this is basically the overall background setup that is necessary. And once this is done, you should activate the user exit. It is LM R1M002. Which basically speaks about account grouping for GRIR account maintenance. It has its own function module, and within that there is a program VXM08U18. Again, it is standard SAP. You go to CMOD transaction, activate the user exit, and you will see all this come up. But the main magic that happens is behind the scene in this custom program. It looks like a custom program, but it is nothing but the code that SAP allows to be activated through the user exit. So this user exit right here is something where we will add the code for account modifier in the program. And this is where we need help from an ABAP developer. What we tell the ABAP developer is, please look for vendor account group 0007, which mainly looks at plans for intercompany transactions. And depending on the account group, you influence the account modifier. So we say that if account group is 0007, then always call ZRX as the account modifier, and therefore to OBYC, it will look at 191000, and whenever it is not equal to this intercompany related vendors, I will look at the third party vendor account, and that's how we define to do this. So it's basically very quick, and it should be very straightforward on terms of how to do this. Again, there may be questions around how to handle history, and again, those scenarios will come up. And again, there are various ways of doing it. So if time permits, we'll try to address it towards the end of the session. But overall, this is a very straightforward piece of work. It does not require too much of a technical effort. The effort is more around testing and then the history part. So just two pieces: OBYC account determination, activate the account modifier, and then activate the user exit. That's the background. Okay, let's see if we have the next topic. So let's look at the automation of work in process, variance, and settlement. Let's understand the background. I think most of the attendees may already be aware, but for those who are new to this topic, so work in process is basically related to incomplete orders. We call them WIP orders or work in process orders or incomplete orders, various terms. Please understand that this WIP here does not mean your semi-finished goods, as in something that is not a finished good. No, this relates to the work in process event or the categorization of orders in SAP. And what will constitute a WIP order? Orders which do not have a DLV or a delivered status, nor they have a TCO status, as in technically complete. So when neither of the two statuses are available for that order, it is considered incomplete. So when would the status of an order be delivered? Let's say you want to manufacture 1,000 cases of a finished product, or 1,000 kilograms or 1,000 pounds of a finished product, and you have manufactured more than that, then the order status is delivered. If you have manufactured less than that, let's say 800, and the order status is partially delivered or PDLV. Now, why is it important? The moment we say the order is partially delivered, which means it is incomplete. I'm still working on it. Shop floor is still working on it. However, you may have an option to short close the order, as in technically complete it before it completes the full 1,000 units. I may close it at 800. Why? Because the customer didn't ask for that much amount, or I'm happy with whatever yield I have got. There's not much wasted, so I don't want to spend money on making more. So one could even TCO the order even before it is delivered. And of course, there are other implications of TCO, that it cancels the reservation and so on. So that's the background. Now, on the other hand, when you look at variance, it is related to completed orders. The status has to be either delivered or TCO, or both. They are considered to be complete. And completed orders will qualify for variance calculation. Now, how exactly is variance calculated? Target part is determined using the standard cost. So as in Material Master, whenever we have a release cost estimate, it will release it using the standard cost, and that standard cost is used for the variance calculation. Again, a very powerful feature. It helps us understand, if this was my benchmark standard, how much did I use more or less, how much in terms of raw material, in terms of activities, and the machine hours, labor hours, and so on. So that's the part that the system allows you to calculate. Again, very powerful feature. And lastly comes the settlement of orders. It basically posts differences coming out of either work in process or variance, and then post them to the financial accounting. So where exactly would they settle? Usually they settle at material, but you can decide to settle orders on cost center or on GL account or on internal orders and so on. Usually it's the material in a production kind of a setup. It will purely be driven by the order type and what exactly you're trying to perform. So let's say you are using orders for research and development, and you don't want to settle those costs to the material. Why? Because there will be lots of trial and error going on. So you say that, okay, I will settle these costs to cost center and then write them off in the period in which they are incurred. So that's the part that happens in the settlement rule. So having given this background about with variance and settlement, let's look at various transaction codes that are related to these pieces. So again, the menu path is controlling, product cost controlling, cost object controlling, product cost by order, period and closing, single function. Now, you may have noticed that we didn't specify production order or process order. Why? Because that's how these are designed. They are common transactions for all sorts of cost objects related to production. For internal orders, there's a different approach, so that will not cover here, but the concept is very similar. So in terms of working process, when it comes to mass processing, it is KKAO, mass display is KKAQ, and individual order is KKAX and KKAY. And similarly for variance, it is KKS1, KKS2, and settlement it is CO88 for mass and KO88 for individual. So having got this background, let's understand what happens when we do the accounting posting at each stage. So it is important to remember that WIP and variance do not post any entries. They are merely calculations. They just hold the data, if you can say that, against the order. And when the settlement transaction is run, it posts the entries to the financial accounting. So at the time of WIP, it basically, takes the amount that is on the order and takes it to balance sheet. Why? Because this order is incomplete. You have already charged the consumption to the P&L and you want to say that, hey, this is an incomplete order. I don't want to consider it in this current month's expense and I want to take it to the balance sheet. And then balance sheet amount gets carried forward and it gets cancelled or reversed when the order becomes complete, either TICO or DLV status. And when that happens, the WIP entry is exactly reversed. The balance sheet amount is taken back to the P&L. Typically, the orders may get closed in the next month or sometimes in the next 2-3 months. So I've seen our clients where they close their orders on a daily basis. Again, it all depends on the type of industry and the process followed. But the SAP system behavior is kind of similar, purely driven by the order status. And then when it comes to settlement of variance, we post the amount to P&L. So if we have spent more money, we will charge more amount to the P&L, saying that I incurred a loss on this order. There was an adverse variance or unfavorable variance. And then the balance goes to the factory output production. Now, at the original goods received, the factory output production or the production value account goes at the standard cost. And when we have incurred a variance, it kind of settles the variance. And now our P&L level, the amount is at actual. And usually you would see that an order should have either WIP or variance. You should not have both unless you are cancelling it in an order from the previous month. So with this background, then the question may come up is that, at what frequency should I run these transactions? That is the mass, WIP, variance, settlement. And what should be the mode? Should I run it in foreground or background? Again, multiple options and possibilities. Technically, you can run it as many times in the month as possible. You will, of course, you'll have to bear the consequence of seeing multiple posting on the same order in the same month if you run it multiple times. And that's where people say that, okay, daily may be an overkill. Can I run it weekly or at least once a month? Yes, that's the right approach. If you run it weekly basis, you'll at least get to see a picture during the month rather than waiting at month end. So again, that's what many clients have implemented. And we definitely want to run them once a month during close. Why? Because that's when you are in the process of closing your books and want to get the full picture. The order should have been completed by then. So in terms of online execution, we say also call it foreground mode, or you could run it as a batch job or a background mode. Scheduling jobs is a good way of taking away the person dependency because jobs are run by the system. The tool, of course, has to be reviewed, the output of the job. Why? Because you could have some errors during any of these transactions and you don't want the system to move forward with those errors. Ideally speaking, that validation that the job ran fine has to be done. And then it comes to, what time of the day should I run? Should I run it during the day, during the night, or an off-peak hour? Off-peak hour is usually preferred because of the fact that, these can be very resource-intensive transactions. And you may say that, okay, during the month-end close, I do want to run it during the day, which is fair and understandable. So when you're running it on a weekly basis, let it be on the off-peak hours during night time, but on the month-end close day, run it during the day or during the close schedule, as it may permit. And then it comes to, okay, if I have to schedule as background job, how would I do that? Are there some special programs? Yes, there are. There are programs which are specifically written by SAP to optimize for background processing. So with, as you can see in the end, there is a program name has BG in it here. BG stands for background. And variance calculation, again, this one is optimized for background and same with settlement. And then there is this feature called parallel processing, which again helps improve the performance. And then here we have given some example naming convention on the job name and then what kind of variants you would want to select by each plant and by each year and period. And once you have run the program, you can review it using SM37, which is pretty standard. I'm sure a lot of clients have used this, and many of you are familiar with how to schedule a background job in SM36 and review it in SM37. Some companies have it done centrally through a basis team or through a centralized batch processing team. But again, it's something that is standard feature. I have seen some clients who are aware that something like this is possible but don't know the program name. So that's where these names will be useful. Moving over to the next one, which is around some watchouts. So again, what we're trying to say is you should always run them one more time before the books are closed, even when you're running them in background. Why? Because some backdated transactions or late entries may have picked up. And then the final run is expected to pick up those final delta postings. And then they have to be run in quick succession because you can have order status change between jobs. And if that happens, then, you may have reconciliation issues between COPA and financial accounting. And the last bullet here is also very useful. This report S_ALR_870131227. Very useful feature. To see the overall picture for the plant or for orders at a time. Okay. Moving on to the next piece, capture trading partner on transactions. So again, we spoke about intercompany. The requirement is to ensure that trading partner is captured on all transactional data and ultimately in the financial reporting. So of course, there are steps to create company, which is part of the standard configuration. And then we have vendor master, customer master, GL accounts. So trading partner is captured on almost all of these master data. In GL accounts, only in select GL accounts because you don't want to set up trading partner on all GL accounts. Let's say you're looking at royalty, where one company is sending royalty to another. And for that, trading partner is maintained as a required entry. But then if the royalty account is common across the entire company, you don't know what account to be put on there. So it will create proliferation of GL accounts. So then comes the question of, how do I make this a mandatory entry or a required entry? And this is where, trading partner may be missed and can create downstream implication on consolidation. So what are the options to make it mandatory? One is use of field status group. Second one is using document types to do that. And third one is validation, which is what we recommend. So we'll see the advantages and disadvantages of each of them. Contrary to the popular belief, trading partner is not available for field status group. As in, you cannot make it a required entry at field status. And standard SAP does not support that. You can enable it on field status by changing this table. But then there is this note here which says that if you do that, it creates some inconsistencies while posting FI documents. So again, not a very useful feature. And then in document types, you can enable it by activating these two fields, partner company and cross company, but it only enables or opens up the trading partner. It does not make it a required entry. And that's where the validation piece comes in picture. So OB28, I'm certain several of you must have used OB28. What we can do is we can say that for certain groups of accounts or groups of users and document types, please ensure that if trading partner is not entered, give an error saying that trading partner is required for a specific GL account. And how do we maintain these groups? We can maintain them using sets. Sets are something that are maintained through transaction GS01 or GS02. And that's where we say that I will ensure that I will maintain set of GL accounts. I will also maintain set of users, and I will also maintain set of document types for which this should be mandatory. Why? Because you don't want it on all accounts. Now, question is, why do you want to maintain users? It is optional. You don't have to, but maintaining a user will ensure that if you are trying to enter some exception entries and you want to exclude certain user from this check, you can do so by doing that in the validation. So again, a very simple feature, but sometimes, we don't even realize that it's not available in the field status. So that's where OB28 comes in picture. Let's move on to the next one, which is our last tip for the day on utilize material status on the material master. So again, it basically determines how material is handled, what transactions are allowed or disallowed in different applications of business processes. Like you want to allow procurement but no MRP. You want to allow costing and plant maintenance but no forecasting. You want to allow goods movement but nothing else, and so on. So those are the things that you can control through material status. There are two views available. One is in the basic data view, which is applicable to all plants, just like description unit of measure is. And then there is plant specific material status, which is in MRP 1 and costing 1 view, which overrides the basic data view status. Why? Because it is specific to the plant, and it's basically the same field available in two different views in the material master. The configuration is in OMS 4 in defined material status under material master. And let's say we have an indicative list of material status. Of course, this is an indicative list. This will vary based on what business requirement is. But what we want to say is that the first status 10 is material under setup. The second status is development phase. The third status is commercial production. And this is where most of your material should be in commercial production. And once you have discontinued a product, then you say that it is no production, deplete stock. And then you say that after 1 or 2 years or maybe 3 years, I will say that this material is obsolete and deletion flag is activated. So which means I never ever want to use this. Now, of course, this can be applicable for finished materials as well as raw and other input materials. Because you want to say that I'm using it for my regular day-to-day operations, so status 30, but now I substituted it with another material, but I do want to use it till the stock is over, so I'll change the status to 40. So no more procurement can take place, but I can still allow it to be consumed. And if it's a produced material, no more production can take place, but let's continue to use it till the stock is exhausted. So this is an example of OMS4 status, and what it basically speaks of is various statuses on the statuses at the header level and various transactions out here, and three types of flags are given here. One is flag A for warning, flag B for error, and flag blank for no message, which means transaction is allowed. Warning means that transaction would give you a warning saying that, hey, material status is 10, I cannot allow you to create an order, so that will be an error message. And if I'm at status 20, I want to say that, okay, please allow the transaction but give a warning to the user so that the user knows what will happen. So in this example, what we have explained is for status 40, if you are trying to create a production order, the flag is B for error, which means that a user will get an error. However, inventory management status is A because you want to continue to use this material till the stock is depleted. Moving on to the next slide. It basically speaks about impact of material status on order creation. So again, this is an example. So when order status is 10, flag B would mean that when you're trying to create an order for that material through transaction create process order COR1 or through production order CO01, an error message is issued, so which means transaction is aborted then and there. If it's under status 20, development phase, a warning is issued, order can be created, but the user has to hit enter or pass the warning in order to, or accept the warning in order to move forward. And the status is 30, which is commercial production. This is where no message is given. This is what the standard setup is or should be. And lastly, when you are at status 40, no production deplete stock, you should set it as status B. That's the background. Lastly, there is this table. You may want to see, okay, I have set up these 5 statuses and there are at least 12 or 14 such processes. How do I see one single view? So this table is table T141. You could see that through SE16 and look at all 5 statuses and look at their flags for each of those statuses. Now notice that status 30, commercial production, has no flags at all. It's blank everywhere. Why? Because you don't want any warning or error messages at that stage. However, in case of status 10, you will see A for error, A for warning for most, but B for error in most other cases. Now, I've tried to explain this in a little different format with descriptions of each of those processes. So what you see in the table below is purchasing, BOM header, BOM item, routing, and going all the way till long-term planning and material cost estimate procedure. Yellow, of course, is the warning part. Red or pink is basically the error piece, and then green is the no message piece. So wherever you see A's, you will see warning. Wherever you see B in the table is denoted as red, and whenever you see blank is denoted as a no message or a green color. On the bottom of the screen, you have impacted transactions. So when you're looking at purchasing transaction, ME21N is referred here as an example. And when you're looking at inventory management, MIGO is referred to as a transaction. So where exactly this will be useful for controlling? So controlling has a requirement that I do not want to allow goods movement till a material has a release cost estimate. So how do we ensure that? Technically, we cannot have a system error kind of put in. We can only have some sort of a, process check. So here, the way it should work is that as soon as the material is fully set up, MRP team or the planning team will inform the costing team saying that I have set this material status to 20, please cost it. The costing person will cost this material and ensure that everything is in place and change the status to 30. So at that stage, goods movement will be allowed. So what you see here as inventory management status 20 has error, but status 30 has no message. So now by way of system check as well as a process check, we have ensured that this material will not have any goods movement till it has a released cost estimate. So that's the background out here. Again, it is something that we can say that it's more cross-functional. It is not something that the controlling team owns itself, but you can definitely say that I can increase the productivity of my implementation by using this feature, which is very powerful, controls almost all transactions on the logistics side, and we can all reap benefits out of it. So that brings us to the end of the 5 tips, and we can now move over to summary, questions, and resources. So let's look at the summary. So what we spoke about and we learned about right cost object. Each company will have their own requirement. Which one is the right cost object? That's what we saw. And then separating GRIR for intercompany. Again, a standard feature, not widely used. That's something that we have tried to see here. And then automation of WIP, variance, and settlement. That's the other piece. And lastly, on capturing trading partner on transactions. And then we also saw the material status for reporting and analysis. One piece which we didn't speak about, in material status, if somebody says that tell me stock of all active materials, you will take a look at only status 30. But if somebody says, no, tell me those materials which have been marked for deletion or they are inactive, can you tell me what the inventory is? So look at status 40 and 50. Technically 50 should not have any inventory, but 40 will have inventory, and you could do that reporting out of it. And all these tips are kind of included in this book, Expert Tips to Unleash the Full Potential of SAP Controlling. And I think we have a slide coming towards the end which speaks about where can you procure those slides. And I think with that, I will hand over back to Maureen and Samantha for the next steps.
Thank you, Ashish. As you said, we're now moving on to the question and answer portion. If you have any questions, now is the time to submit them using the purple Q&A button at the bottom of the screen. We do have a couple questions in here already. First one, material status sounds like a useful functionality, but is it correct to state that it is more of a cross-functional feature than merely a controlling feature?
Yes. Thank you, Maureen, for the question. I agree. This is a very good point. That like most things in SAP, material status is something that has a lot of value when you use it in an integrated cross-functional way. Controlling teams standalone cannot use this feature, and that's where it has to be a joint effort. Like Material Master, which is a cross-functional impact, material status too has similar impact. Everyone benefits, but controlling may arguably be the most to gain out of this, since it is usually the controlling folks who are asked to provide the big picture reports and financial numbers.
Thank you. We have another question from Gary. The order settlement jobs can sometimes take a long time. Are there any tips to reduce the run times?
Excellent question, Gary. So yes, I have seen this at several places, when companies have struggled with the performance of WIP, variance, and settlement. What you could do is, one is of course parallel processing that we spoke about. It reduces run times in a great way, sometimes even 75 to 80%. The other option is you can explore setting the status of those orders as closed, as in CLSD status, which can be done for individual orders through CO02 or COR2 transaction, and there are mass transactions as well, CORM, and there are a couple of others that I have used in the past. What happens is when you change the order status to CLSD or closed, they will be skipped during WIP, variance, and settlement, and that will help you reduce the runtime for your month-end jobs. There is one more step you can implement is activating the deletion flag, also known as DLFL, which will basically ensure that those orders also not picked up, as well as they are ready for archiving. that actually can create a lot of advantage for your implementation. I hope that helps, Gary.
All right, next question. Our company has struggled with the performance of WIP, variance and settlement jobs. Sometimes they take 3 to 4 hours to complete, thereby delaying our close at times. Apart from running these resource-intensive jobs at off-peak times, what other suggestions do you have to overcome this issue?
Yes. So this question is very similar to what Gary asked. It's all about performance. So one is try to use parallel processing. This may require a one-time setup with the help of Davy's team. The programs run or jobs run on multiple background jobs at the same time and thereby have performance improvement. And then, of course, closing the statuses and setting a deletion flag is yet another feature that you can use.
Next question, are these features still valid and applicable in S/4HANA?
Yes, again, a very good question. So as far as applicability to S/4HANA is concerned, most of these would be very much applicable. But as you can think that performance issue that we usually see in traditional ECC or enterprise is not too much of a concern from S/4HANA point of view. So the with variance settlement and reducing the amount of data load is not too much of a concern from S/4HANA. But as far as each of those tips that we looked at, evaluate the right cost object, separate GRIR, automate with variance settlement, capture trading partner, and utilize material status are concerned, the features are same. They are very much available and should be used or should be activated in S/4HANA as far as possible. Because ultimately, you are capturing better amount of data and better use of your data and ensure that, it's useful for other downstream applications. As an example, trading partner for consolidations. So in short, the answer is yes, they should be applicable and valid for S/4HANA.
Thank you. Next question, is it possible to set up separate GRIR accounts for each type of material, say raw, packaging, supplies, semi-finished, or finished materials?
Yes, I would say yes, because, very likely you have attached these material types to different valuation classes. If you refer to the OBYC setup for transaction WRX, you'll notice that the valuation class is a standard field is already available. In our example, all valuation classes were mapped to the same GL account for GRIR, but it does not have to be that way. You can define separate GRIR accounts for each valuation class. And to take this even further, you can say that for intercompany perspective, you can have separate GRIR for each vendor account group and valuation class. Just that your setup may become a bit complicated from the user exit coding point of view, but it's definitely doable.
Next question, in table 1030, how do you map from a movement type to the transaction account modifier?
Okay. Yeah, that's a good question as well. So table T030, which is the behind the seat table that goes for OBYC, FI account determination, that table controls a lot of account modifier for each valuation class and a type of transaction. So if we say that I'm looking at DSX inventory and I want to hit a certain account, then that is maintained against the valuation class. Whereas we take a look at GBB, which is the offsetting account for inventory posting, that's where you have an account modifier coming up. Now that account modifier is linked to the movement type. Movement type, as we know, is configured in OMJJ transaction, OMJJ configuration transaction, and its behind the scene table is P156X, so table 156X. So if you look at account modifier in that table for the given movement type, and then compare it in the in the table T030, that's where is your link between the movement type and the GL account via the account modifier that is linked through table T156X and table T030. So it's not directly in table 30, if you to answer your question directly, but it is available through an indirect way that you can maintain it.
Our next question. We already use process orders in our current SAP system. We have acquired a business unit that is on another SAP system, but they use production orders. We now want to migrate them on our SAP platform. We're wondering if there is any value in having this new business unit switch to process orders when they move to our system.
Very good question. Yeah, this is a good scenario that you have highlighted. I have seen a similar scenario in at least 2-3 occasions. First of all, if you're using production process orders for one business unit, there will be a lot of advantage of continuing to use process orders for the new business unit that is being brought over to your system. Why? Because there is less maintenance, less training, security roles are easier and whatnot. At the same time, the functionality from controlling is same. So for a controller, it should not matter whether you bring them on process order or bring them on production order. Uniformity is desirable, but it's not a main requirement. But the main advantages of using process order is that you are able to use process instruction sheet or PI sheet for your day-to-day shop floor activities. So I want to say that it depends on your production planning team's comfort level. If they say that, I want to use PI sheet for the incoming business and thereby bring some sort of process harmonization, why not? But then at the same time, if the new business unit is discrete manufacturing, let's say it's manufacturing machine parts, which is more suitable for production orders, and your business is in process industry, that is, let's say chemical, then there's no point in forcing the new unit to use process orders because they are better off using production orders. So I would say this decision depends more on the type of industry and fitment and the comfort level that you see from production planning team and the level of change management effort that you may see.
That looks like all the time we have for questions, Ashish, so I'll hand it back to you for any closing remarks.
Great. Thank you, Maureen. And thanks, team, for these lovely questions. I really enjoyed addressing them. So let's look at the resources slide, which speaks about, one is, of course, ERPfixers is your go-to resource for any questions that you may have on, certain topics that you're trying to do some research or you've faced an issue and you want to get it resolved. ERPfixers has lots of fixers. I am one of those fixers on the controlling side, and there are fixers in almost all modules of SAP, so that's kind of one advantage. The other advantage is you need not have your own in-house consultants to do that work for you. You can always, refer to this expertise from ERPfixers. info@ERPfixers is the email ID. So again, if I've not been able to address any questions in today's session and you have any certain question that you want to address, you can always reach out to us on info@ERPfixers and also visit our website. And then I would also like to point to 2 books. The Expert Tips to Unleash Full Potential of SAP Controlling is the book from where we have picked up these tips from. It is published by Espresso Tutorials and it can be seen through the link that you see on the screen. And then the other book is The First Steps in SAP Controlling. This is more of a beginner book or an entry-level book, which was also published by Espresso Tutorials, and the English version is also available as French translation and Portuguese translation. The names are I'll not pronounce the names here, but basically all these are available on Espresso Tutorials website for you to pick up. And then I have one more slide for resources. So Paul Ovigel, who happens to be the founder and CEO of ERPfixers, has written several books. I have highlighted 2 of them. 100 Things You Should Know About Financial Accounting. It is published by SAP Press. Like how we saw controlling related tips in the other book, this has 100 tips for the financial accounting. Again, very resourceful, lot of good, interesting tips here. And then the second book that you see is the book that Paul and Rogerio Faleros authored together for SAP Press. It was published, I think, just about 2 weeks back, Introducing Material Ledger in SAP S/4HANA. As you may have heard that with S4, Material Ledger is kind of becoming mandatory. A lot of clients have a lot of questions. So I believe this is a very good starting point for them, for the readers and for SAP practitioners to get some nice information. And lastly, I think we have come to the close of the session in this webcast. I'll hand over back to Maureen for any closing comments.
Thank you, Ashish and ERPfixers, for a great webcast. If we didn't get to your question, Ashish will follow up with you post-webcast. On behalf of ASUG, I'd like to thank all of you who took the time out today to attend this webcast. The recording and slides from today's program will be posted to the ASUG website. Please be sure to check out information on ASUG Annual Conference and visit our social sites. With that, I'd like to close today's webcast. Have a wonderful day, everyone.
Thank you.